Good afternoon. This is Brad Dennis with BIS Commodities and your weekly market update. This is for the first week of May. It's a beautiful day here in Iowa, 85 degrees out, sunny. Gorgeous for the beginning of May. Let's first start off with the equity markets. Looks like equities or S&P is going to close down about $10 this week. There's the old adage, sell in May and walk away, and some people are buying into that. Today we did get non-farm payroll out of the government. That came in at 160,000. Now that is under the 200,000 that was estimated, but if you take that over the last 3 months, you still are averaging over 200,000. So it's not really a game changer when you're talking about how the Fed is monitoring the employment situation. Employment rate's still at 5%. You did have an increase in hourly earnings, and you did have a weekly hours increase as well. So if you're looking at wage inflation, you want to see those numbers come up. And definitely not a game changer with that number out today to say that the Fed will not hike. That's still going to be up for debate. Today we did have a little bit of Fed speak. Dudley was out, and he was talking up the possibility of a June rate hike. So a lot of job owning about not taking June off the table for that rate hike right now. Market listened to it. We were down 50 cents in the dollar index, closed or ended up the day in the positive there. So definitely have to keep an eye on that. Moving over to the energies, crude, we had the scare with the fires up in Canada and getting close to the sand pits and all, and actually you are down for the week compared to last week, and actually an inside week. So we're kind of biding some time up here. Look at those deferreds. They're still up there. They're at hedgeable levels. So you do have producers hedging crude out into those deferred months, and that means that rigs being taken off of is definitely starting to disappear. Now, when will they re-up production? That's anybody's guess, but maybe they've taken enough off right now. We'll see how that pans out. Livestock market, we're seeing lower weights this week, so you saw a nice little bid in the June cattle, got them up over 120 level. Still haven't heard of any cash trade this week. You did take it over its moving average. So technically the cattle market is definitely improving, and like I said, with the lower weights, you should see some tightening in the market. See if we can take out that 123, 124 area in the Junes, and then go from there, I think. Over in the hog market, we're looking at some big drops today in both cutout and bellies. Cutout was down over $4. Bellies, I think I read this right, at down 23. So kind of surprising numbers there. Let's see if these are real and we get the reaction on Monday, because we were only down about $1 in the hog market. Over in the grains, kind of a wild week for beans. Corn, not so much. Corn's followed beans on this $2 rally up, and we were able to test some higher levels in the corn market, and then basically basis brought us back down, widened out basis, and now we're looking kind of at that December corn at about a 480, 495 level, maybe in that range for a little bit. We're looking at good planning progress, so we came off of our highs. We knew they didn't want to really follow the beans step for step, so a little bit of profit taking before next week's USDA report. Saw an export announcement this morning for corn sold to Israel that was supposedly out of the Black Sea but came out of the U.S., which is a good sign. But then we had disappointing export sales yesterday. So it's all kind of equaling itself out. I think what you've got to keep in mind is we're going to come in on Tuesday, we're going to get the USDA's report, and people have to look at the average guesses, and your average on old crop is 1.8 carryout, and new crop is 2.3 billion bushel carryout. There's no reason to change acres out there right now. with our planning progress, there's no reason to adjust trend line yields. So should have a pretty big number on Tuesday, and I think that's what the trade's looking at as well, bringing beans down about 15 cents for the week. Now, as far as corn down 15 cents for the week, pardon me. As far as beans are concerned, it's a roller coaster. And, beans are either an investment tool or they're a hedging tool. And as of late, the investors have been the guys that have been pushing this market around. That's why we're up at these levels. Investors are trying to buy beans because they think we're going to run out, because you're going to have a lower bean yield out of, or you're going to have less beans coming out of Argentina. Now, that'll be resolved on Tuesday as well. Our government will probably revise down to about 55, 56 million metric ton how many beans are coming out of Argentina. Right now, we're trading a much lower number than that. As I said, the investment versus the hedge. On Wednesday, we saw all these bases come off from the processor, from the Gulf. And on Thursday, we saw that reverberate through the bean market as we sold it off and took out a 1020 level that had been very good support for the technical trader as of late. So you take out 1020 yesterday, you take it down to 1010 in the Julys today, you go up to that 1020 area. What was once support should be resistance, right? Well, we powered right through it. And you could see that somebody just wanted to buy it today no matter what. On the close, we were trading around that 1030 level. Last week, we closed at 1029 and 3/4. Well, if you're an investment vehicle and you want to dress up the close, you want to have higher closes on a weekly basis. So there was big buying in July beans. I think about 8,000 beans traded in the last 2 minutes, just really to dress up that close. And it is what it is. Like I said, you know what? It's 85 degrees here in Iowa. Everybody's out planting. They're not thinking about selling beans right now. They're thinking about getting beans in the ground. So not a whole lot there for the last 2 minutes to absorb that kind of buying. It is setting up for a very volatile summer, one which, any little hiccup in the weather is going to cause more price volatility, just because we do have that shortened crop down in Argentina. Now, when you put it in the big scheme of things, no, you're not going to run out of beans. Yes, you've got plenty of beans for the world, but you are looking at a little bit lower supply. So that's what the trade is looking at here. Like I said, the numbers that they're trading are well below 55 down in Argentina. So we're going to see what they come out with on Tuesday and kind of go from there. Now, on Tuesday, we are going to get our old crop ending stocks. They're looking at about 426 on that, probably raise up exports a little bit. But they can raise up exports, but like I said, that basis at the Gulf just collapsed this week. Nobody wants to buy them right now. So going forward, we still have to see those decent numbers to support that summer demand. You got to remember, you've got negative crush margins in China. You've got the ports full of beans. You've got the government jawboning about, hey, we're going to let reserves out. And maybe that's a way to talk down price a little bit, and it's all jawboning. But you got plenty of beans over there, so to think that the demand is really going to escalate over the summer, I think is going to be tough to see. So you're looking at a 426 for old crop beans. New crop, that they're putting at about 405. You're going off 82.2 million acres, which could be higher than that because, hey, we've rallied beans substantially since that last survey was taken. So 405 on the ending stocks carryout, 82.2 times trend line yields. They come out with a 405 carryout. The wild card out of it is going to be, what are you going to put in for China's demand? Is it going to be 84? Is it going to be 87? And those are the big numbers out there. So 3 million metric tons. You're talking about quite a few beans. That's 100 million either way. So that's where the discrepancy is. How they fit it all together, we'll see on Tuesday. and then, once again, let the weather markets commence and trade the weather from there on out. So that is the update for the first week of May and the broadcast.